Experts say insurance claims from these fires could be in the tens of billions of dollars.
I think it could hit $1 trillion. On your sides, Christine Lazar is here with tips that homeowners need to know. It's astronomical.
Yeah, I mean, look, as I said, you've got the crisis that we're in right now of fighting the fire and having these homes lost, but the fallout to the insurance industry and all the people trying to rebuild is going to impact us for months, years. Decades. And in fact, Paul Diano sent me some figures from the National Weather Service. At this point, they're estimating $135 to $150 billion in losses and the economic impacts. So we are talking about a lot of money. And we want to bring in now insurance expert Karl Susman. Karl, thank you for joining us this morning. You've been doing this a long time. You're in a family of the insurance industry. In terms of scope, do you anticipate the number of claims filed for these fires will be unprecedented?
There's no question. It already is unprecedented. And at this stage, we are still having most people not even aware of what the situation is with their home. They're evacuated. They're hoping for the best, but they don't even know for sure. So I think the number of claims that we've seen so far is just the tip of the iceberg.
Yeah. How many have you heard from of your clients who have lost their home?
We have over 60 clients currently that have had total losses for their homes, and we're working with them to be sure that their claims get started and the process to get their claims handled is underway.
And to put that in perspective, for other fires, how many would you have?
A bad fire might be, 3, 4, maybe 5. Wow. It just depends on where it is. There's been nothing like this, even remotely close, that I've ever experienced in my over 3 decades in doing this.
So what does this mean for our insurance market in terms of cost to insure and our ability to find coverage going forward?
Well, as you just said, Ricardo Lara just went ahead and put a moratorium in place for the industry. So if you're in any of the affected zip codes or the zip codes that directly surround the areas that are impacted by the fires, then you can't be non-renewed. And even if your policy is canceled for, say, non-payment, the industry is supposed to turn around and take a payment from you if you ask and reinstate your policy as it is. As a side, be sure if you need that, reach out to the carrier directly, reach out to your agent or broker, ask for assistance. They're going to do the right thing, but they need to be told to do it. They're not going to automatically just keep policies in force if they've lapsed or if they haven't been paid. You have to ask them to do it.
And we know we've got this sustainable insurance strategy, which the goal of that is to have more insurance coverage for people in these higher risk areas. What about rates, though? Are we going to see higher rates?
I think what's going to happen with the sustainable insurance strategy, and thank goodness it got put into law before this happened, we're going to see sort of a reshuffling in areas that are higher risk for fire. We're going to see premiums reflect that and be higher, and areas that are in lower risk for fire significantly lower than they used to be before, and certainly in comparison to what people are paying in the higher risk areas.
Now, we know State Farm recently canceled over 90,000 policies, a lot of those, a majority of those in the Palisades. So does that mean that we could have some of these homes that have burned down either uninsured or even, let's say they've owned it a long time and they don't have a mortgage, uninsured or underinsured?
It's possible. Actually, the State Farm's non-renewals hit the Palisades very hard. It was the second highest zip code in the state for non-renewals. They non-renewed 1,626 homeowners policies in the Palisades alone. Now, it's possible that some people were not able to obtain other coverage, but the people that have, hopefully, they're going to be with a carrier that has sufficient financial stability to be able to handle those claims. A lot of them are with the California Fair Plan now. And fortunately, the Fair Plan does have resources to be able to handle this type of a claim situation.
Will these homeowners get enough coverage from these insurers to rebuild without considerable out-of-pocket loss?
Well, these policies are designed, if written properly, to rebuild homes. That's the whole point. The only out-of-pocket technically should be the deductible on their policy. So written properly, these policies are designed to rebuild the property.
Okay, now let's talk about the California Fair Plan, because we know there are going to be homes in this area that are on the California Fair Plan. That is what homeowners turn to when they can't find traditional insurance coverage. Can the program afford all of these claims?
Fortunately, the California Fair Plan has access to a lot of money. They don't have a ton in the bank right now.